All right, everyone. So it's been all over the financial news. GameStop stock has absolutely been going crazy. And of course, this is mainly due to Reddit and Wall Street Bets trying to pump up the stock in an attempt to create a massive short squeeze for all of the hedge funds that were short GameStop. So what I'm going to do in this video is talk about what my thoughts are on this and how this shows what part of the stock market cycle we're in. And then I'm going to show you how you can actually potentially make money from GameStop stock going up like this without actually taking the risk of investing directly in GameStop. So if you want to know how to do that, be sure to watch until the end of this video. So option contracts by individual traders have been bought at a record high over the past few weeks. Here's a nice chart showing that the small trader call buys as a percent of the stock exchange volume just broke an all-time high. And this tweet was from January 16th. So this was 11 days ago. So I would imagine that it's even higher now than it was back then. So this just shows you the type of speculative market we're in. Obviously, worthless companies going up 10 times in a matter of days isn't natural for the markets. And this sort of behavior does solidify the fact that we are in a bubble and that whenever this ends, it's probably going to end pretty badly. Now, taking a look at GameStop stock right now, today closed just under $350, which is just insane considering yesterday it closed at $150, and even that was up so much from the previous few days. So knowing me and how I'm a value investor, I always try to find ways to make money off of situations like this without actually taking the risk of investing directly in the company. Because everyone knows GameStop's not worth $350, and everyone knows that whenever this ends, GameStop and all these other stocks that are being pumped up like this are going to come crashing back down. So what I've been trying to do is find a way to take advantage of these price increases without actually taking the risk of being a bag holder on any of these stocks. So I tried to look for a few things. The first thing I tried to look at was GameStop bonds, because if GameStop had a lot of debt and the stock price is just going crazy, obviously what GameStop could do is just issue new shares at the insanely pumped up stock price and just use that to pay down all their debt. These bonds probably would have been a good deal a few weeks ago, but now they're trading at over par value. And so this is definitely something I'm not going to do. GameStop could retire all of these bonds at 100, which means you would lose money buying these bonds. Now, another option that you could do, since GameStop is obviously so overpriced, is you could just short GameStop. And this is something I would never do. I think that is insanely risky right now. And you can ask any of the hedge funds that were short GameStop and lost billions of dollars over the past few days just because of this short squeeze. So I will definitely not be shorting GameStop. I've never shorted a stock and I don't know if I ever will, but this definitely isn't the time to be doing that since it's completely unclear what could happen. Tomorrow the stock could gap up another 100% and then you would lose more than your initial investment trying to short the stock. So that's definitely not something I'm doing. Now the next thing I took a look at is potentially doing something with options with GameStop. Now, typically when a stock is up like this and I'm very confident that it's going to fall by a large amount, all I would do is buy a long dated put option way out of the money, and that would allow me a cheap way to profit potentially a lot if GameStop does come crashing back down. Now, the problem with that now is that it seems like everyone already knows about this, and so the option premiums are so inflated that it's going to be hard to make money even if GameStop does come crashing back down. These options are so expensive that to me it's not even worth it to do this. So here are the options. So here's the option chains for April 16th. So this is looking 3 or 4 months out. And going all the way down to the strike prices in the 200s and 300s, these options premiums are so inflated that, for example, if you bought the $300 put, the stock would have to go down $195 just for you to break even. So doing this, it's not possible for you to make many multiples of your money just because the premiums of these options are so high. Even looking at way out of the money, the $4, $5 strike prices, you can see all of these puts are up today, even though the stock jumped up over 100%. And again, this is just because of the implied volatility, and everyone has the same idea of buying these puts. So I really don't think the returns from these are going to be that great, even though you still potentially could make some money doing this. I also took a look at some of the other stocks that are being pumped up like this. Here's a list of some of them, the stocks that are heavily shorted and being talked about on Wall Street Bets. You have stocks like AMC, Bed Bath & Beyond, iRobot, Fubo TV, Tootsie Roll, GoGo. And so I also took a look at some of these, looking at the bonds, looking at preferred stocks if they had any, looking at warrants. And so there wasn't really much I found with those either. At least nothing that jumped out as this is a very good risk to reward that I should spend my money on. Now, a stock that I do have my eye on is National Beverage Corp. The ticker is FIZZ, and this is one of the stocks that has been being pumped up. As you can see, up 40% today. And this is actually an outstanding company, unlike all these other companies that are worthless. And so I'm keeping my eye on this one. I'm not going to buy at these prices. I'm not going to short it either, but I am waiting for whenever this bubble deflates, if FIZZ does get beaten down to a low enough price, I will pick up some of this stock. Because if you take a look at what the company can actually do, they are an incredibly high quality company. Over the next 5 years, their earnings are going to grow at 25% a year. They have absolutely no debt, have a ton of cash on the balance sheet, and their return on investment and return on equity are both insanely high. So this is obviously a very high quality company. The insider ownership is also very high too. So this is everything I like in a company pretty much. But again, at these prices, I'm not going to buy it. If we do see the bubble pop and all of these stocks just crash, everyone panics to get out, and we do see the stock get beaten down way under where it should be, then I will potentially pick some up too. So that's another way to play this. Just wait until all of these stocks come crashing back down, and then the highest quality companies you could pick up as a discount as everyone is trying to get out of them. Now, out of all the ways I tried to find a low risk way to benefit from the gains in GameStop, one of the most compelling ones that I found was a company called cenve. Now, cenve has nothing to do with any of these stocks that are being pumped up, but they are an investment company trading at a discount to their net asset value, and they do have a large stake of GameStop. So cenve filed for over a 5% position in GameStop back in October. So this was a few months ago. They've been holding GameStop. The value of the company is currently a 50% discount to its net asset value, and they're up huge on their GameStop position. It's not clear if the company has sold GameStop yet, but either way, they come out with a huge gain on this, and that huge discount to their asset value gives a nice margin of safety with this company. So they're a Canadian investment fund. They trade over the counter at this ticker SVCTF. And so obviously Melvin Capital is the hedge fund that was short GameStop and lost $1 billion. And this is talking about how cenve could actually be up those billions of dollars that Melvin Capital lost. And so like I said, it's unclear. They haven't said if they've sold their GameStop position yet. You would imagine that they probably would have sold at least some of it. But overall, this could be a way to get exposure to GameStop stock at a larger discount to where GameStop is currently trading. Now, just as an example of how much GameStop could benefit this company, if they sold their GameStop stock at $100 per share, which is very possible, that means they would have made $360 million based on how much of GameStop they held, and their market cap is under $500 million. So this just shows potential huge upside for this company if they did in fact benefit in this rise in GameStop. Now, this is the chart of cenve stock that they trade. The one that trades over the counter in the US markets. Obviously, they've seen a run in the past few days. So if we take a look at the 5-day chart, the stock is up 34% in the past 5 days. But the thing is, this company should be up a lot more based on their GameStop holdings. So it's pretty clear that even though someone's been buying this stock, it's still unknown by a lot of investors. And so once news becomes widespread that this company did hold a large amount of GameStop, it's possible that the stock goes much higher. Now, in terms of what I'm doing, I haven't bought this stock yet. I'm still looking into a little more. I'm still doing some more research on the company. But I will let you guys, but there is a chance I may just throw a few percent into this company since I am sitting on a lot of cash, and the risk to reward does look pretty good even after the stock has gone up 35% in a week. Obviously, this is not financial advice. I'm not telling everyone to run out and buy the stock because like I said, this whole mania with GameStop and all the other companies could end tomorrow. Tomorrow, everything could just come crashing back down, which would probably result in a company like cenve Capital falling too. So obviously, this is more of a speculative play. This wouldn't be one of my core investments that I put a super large position in. But from what I see now, it still looks like a pretty attractive risk to reward way to benefit from GameStop. So that's it for this video. Let me know if you appreciate this research and looking at ways to profit from a stock market mania like this without the risk of actually investing in the stocks themselves. If you found value out of this video, hit the like button to help out this channel. Subscribe if you haven't already. So that's it for now. I'll let you know how this is playing out in the next few days. I'll send out a post if I do end up buying this company. So that's it for now, and I will see you next time.